What's up, everybody? It's Brendan from Market Makers. Happy Saturday, everybody. So, took the last couple days off, guys, visiting some family, had to do some traveling. Let's talk about how Bitcoin finished up the week. Real quick, marketmakers.trade. That's how you get to our website where you get 40% off to come trade with us, get some education, get our trade signals, and of course the BitGet link as well in the video description. Trade anonymously, no VPN, no KYC. Let's start off with the Nasdaq because, as you know, Bitcoin follows tech. Let's look at the Nasdaq. Nasdaq had the third strongest bear rally of all time in stock market history, plus 18%. It has now given back 13% of the 18%. So bear market rally, but you're still holding your higher low structure, although this is a very bearish candle with no wick. I expect this to come down to the bottom of the range, hopefully stay in this range, and will stay in this accumulation zone for Wyckoff. So that's a 3% move just on Friday for the Nasdaq. Let's take it up to Bitcoin. Bitcoin, looking at the weekly time frame, on an ascending channel. We did fall to the base of the channel. Look exactly, let me zoom in so you can see this. This is a GAN 45 angle, okay? We wicked it. You see that? We hit it almost on the dollar and dropped. So below this 45 is bearish, above it is bullish, and as you can see, it's really giving us a ton of difficulty. Like I said, this ABC correction here, that 48,266 may be the top here on the weekly time frame, and this is just part of our descent, but we're still holding the channel, okay? So you're doing what you're doing until you're not doing it anymore, and you were doing bullish accumulation. We're going to look at it on a daily time frame. And remember, if we do make a move up, different target levels here, the 236, which we almost got to, was 43,205. Maybe some exchanges it did get hit. And as well, we have the 382 up here at 52,117. That's really tight in with the top of the channel. And again, if the sentiment shifts and it does turn bullish, that is a good area to look at. It is still obviously a lower high from your all-time high, so keep that in mind. But, you know, it is positive momentum. Looking at the daily, guys. So when we look at the daily, we're in our zone still. So I know a lot of YouTubers are doing, yeah, everything's dying, you know, the rocket ship shooting across the screen. But when you look at this, you're still in your pocket, okay? You see that volume pocket over here on the VPVR with candles going back to December 4th. Where am I worried about Bitcoin? I told you if we sweep this 32.9, let me show you that when we pull this in, okay? The reason this is a big worry, let's go all the way back to this. This is basically the whole bull run. Look at this. So let's go ahead and put a ray on this. If basically you get below, let's say right about, it's almost perfect. You see this cluster of volume? Remember, volume is support and it's resistance. If you get below this, you're doing this. This is price discovery almost, okay? Look at this. Look at these deficit of pockets of volume here. This is how you're going to get to that 23K number down here for your A wave, okay? In this larger A, B, C correction here on the weekly time frame. That's how you would get to that. If you lose this area, that is 31.6. Basically, like I said, below 32.9. Below 32.9, you're flirting with danger because you have wicks, okay? You have wicks here, and you have some smaller clusters here, but you don't have much here. You want to stay above in the meaty part of the volume. It's very, very important, okay? Because the markets do flip very bearish. I mean, you could argue they are very bearish already, but if they flip even more bearish, then you lose 32.9, you're going down into the 20s. Like I said, I envision 23K, and then you'll have a big rebound. But again, it's a descending bear market still at that point. And I think the deeper you go, obviously, the more difficult it is to make any type of price climb up. Having said that, we do trend analysis here, and when we're looking at this, you have your larger Wyckoff structure. This is accumulation still, okay? You have your larger Wyckoff structure. That's your ceiling. That's your base. You have your mini cough inside here, and you're holding your structure very, very well. You did get rejected by the 0.5 fib, but you fell back to your trading range. This is how accurate Wyckoff can be. You can see you're still in your trading range. Again, key concept, guys, law of three, right? And you have patterns based on a law of three. Valley, peak, higher valley, higher peak, higher valley, And if we can come up, defeat 48,266, you can have a higher peak. And again, that higher peak is going to take you to the low 50s to the mid 50s with the 1618 at 55,128. That's not hopium. That's just market structure, guys. So just be aware that that does exist if these markets do make a little bit of a push up. But so far, they've just been holding structure, slowly bleeding, slowly giving back their gains that they made from the third strongest bear market rally in the history of the stock market. Let's look and see what our indicators are showing us, what's changed over the last couple of days. Let's go ahead and look at our supply and demand. As you can see, our heavy supply line is now between the 233 and the 200. It is descending. It's at the 786 right now. This range is getting tight, right? Well, you can see how tight your range is here. But this range between where the heavy supply is and the stronger demand is getting tight. So you're going to have a movement in the market. And that movement, again, could be up to defeat key resistance, or that movement could be further down. So very important to pay attention to that. And let's turn that off. Let's see what we're doing in Ichi. Go ahead and turn the VPVR off. So Ichi's doing what we're doing. So we wrapped around the cloud, as you guys know, in the daily. We punched through it. We try to hold our higher low structure here with our LPS to accumulate and break out more to the upside. We got rejected by the 1 fib, by the 200 moving average at 48,266. Fell back to the cloud, try to get some support, basically accumulating in the cloud. You see this? And something to note, as I always point out, this cloud's super thin. I don't even see a top to it, okay? This just looks like a line, and then it's forming another cloud here. So this cloud here is super thin. So we could be stuck here in this range. If Bitcoin can stay in this Wyckoff trading range, I wouldn't be surprised if we do have a rally break through somewhere in this weaker part of the daily cloud. Why do I say that? Given that the Nasdaq's been hemorrhaging, given that tech's been hemorrhaging. I say that because price really does two things. It rallies to resistance or it falls to support, okay? That's what it always does. So just being an accumulation, yes, you could just fall out, okay? Sentiment can shift. Some bad news could come out about the market, bad news about the conflict, and you could just drop. But what price likes to do is test resistance or fall to support. We tested resistance to 0.5. We fell to support our trading range. So I think we're going to accumulate for a couple more days here and then potentially try to make a move back up to test again. And I really want to see a higher test. I want to see us test the 233 and I want to see us test the 200, okay? Clearly, there's resistances before that, such as the 618 with the 233. This zone, again, guys, is going to be absolutely crucial to flip 44K. You flip 44K, if you can hold it. When I say hold it, I mean something like this, like what you're doing now, but at a higher level up here, okay? You're going to have price waves. You're going to have ups and downs, and you don't want to make a double top and break a neckline, things like that. But if you can hold it and accumulate or just pump through it, you need to test the 200. Remember, the 200 is what the large operators use. This is price trading above this line, price trading below this line over a period of 200 days, and this is your average, okay? When I say large operators, if you just turn on Fox Business News, CNBC, watch any of the business shows, guys. If there's anybody with any technical skill at all, they'll say things like, oh, well, we retested our 50 moving average, or we're retesting the 200 and we lost it. We broke down in technical structure. Their technical analysis is usually very, very basic, because they're all fundamentalists, right? They just look at the fundamentals of a company. Every time Tesla makes a new car, the company goes up 3%, whatever. That's how they analyze the market. But some of them understand basic concepts like moving averages. So the 200 is one that is widely tracked. So they're paying attention to this, trust me. So if we do get our rally up, and I do want to see a rally up, I believe that is why we're holding this bullish accumulation structure, is because we are waiting for a rally up. And if we do get that rally up, then this could be a nice point for a trade. Again, flipping it for support for a long, or hitting it for resistance for potentially a short. That's at 44K and at 48,266. And above that, you flip 48,266. Like I said, 1618 is where I'm looking at 55K, and then the levels just slightly beneath it as well. All right, guys, here's your video. I'll be doing another video Sunday as well as some other videos. I get a lot of requests for commodities, indexes, stocks, things like that. So those videos will be coming out next week as well. And I hope everybody has a fantastic weekend. Be safe, everybody.